You are listening to the Wealth Formula Podcast with Buck Joffrey. Get ready to change your life.
Welcome, everybody. This is Buck Joffrey with the Wealth Formula Podcast coming to you from Montecito, California. And before we begin today, I want to remind you there is a website associated with the show called wealthformula.com. That's where you go if you want to sign up for some of the other resources that we have with the show, various lists and downloads and all that kind of stuff. There is a investor group that is also part of Wealth Formula. It's for accredited investors. And if you go to wealthformula.com, you can sign up to the Accredited Investor Club and get onboarded. And that'll give you an opportunity to potentially see some deal flow through there as well. Remember, you must be an accredited investor. That's not something you have to apply for. You either are, you are not. You make $300,000 per year if filing jointly, $200,000 if filing by yourself. That has to be for at least 2 years with a reasonable expectation of continuing to do so in the future, or you have a net worth of $1 million outside of your personal residence, and that makes you accredited. So there's other definitions too, but those are the main ones. And they might change with the Trump administration coming in, and I think there's some talk about making things more accessible for individuals who are not accredited currently by definition now. It's kind of funny because if you think about it, the way the law is right now, it basically says, if you don't make a certain amount of money, you're probably not smart enough to invest in things that there is high risk in, and or private investments where there's not publicly traded stuff. Obviously, has a whole bunch of safety guards around it. Oftentimes is not where the money is actually made. And most people who are ultra high net worth are in the private space. They're in the private equity. They're in, private real estate opportunities, things like that. And right now, people who don't make a certain amount of money don't really have access to that appropriately. So there's a lot of talk about changing that. Anyway, that's not what today's show is about. Today, we're actually going to talk about something that's been in the news again quite a bit. I've been talking about it for a long time. It's Bitcoin. And it's been in the news because it sort of surged past $100,000 and then it came back again under and now back over. And by the time this goes out, who knows where it's going to be. But, I've been talking about Bitcoin since late 2016. Somebody wants to look up the first time I was talking about it and maybe let me know when that was. But it was, price was around $3,000 or $4,000. And that's when I kind of really started to believe in its potential. I'm not saying that I was smart enough to, go all in. I wasn't, but I definitely thought there was something there. And I believed it was more than a tulip thing. I spent a couple years before that hearing about Bitcoin, but kept listening to Peter Schiff and, I shouldn't have done that. Anyway, what is Bitcoin anyway? I mean, if you've been listening to the show for a long time, you have heard about it plenty of times, but there's always new listeners and maybe something that at different times in your life you've turned off, but it's something that I'm going to continue to talk about because at its core, it's a type of digital money that doesn't rely on banks or governments. And instead it's powered by blockchain technology, which is a public ledger, and that securely and transparently records every Bitcoin transaction. And this technology makes Bitcoin decentralized, meaning no single person or entity has control over it. So when you think about decentralized, it's important to really understand that almost everything in our lives is in fact centralized. So banks, have control over transactions. The U.S. government and the Federal Reserve, are behind the dollar. You look at any social media platform, Facebook. I mean, you aren't just talking to another person there. You're talking to another person through an entity that is owned by Facebook, right? That's a centralized company. So decentralized means there's no third party. Let's say. I guess it's similar to say, handing over a piece of gold to somebody. It has value, right? And that's essentially what Bitcoin allows you to do. It allows you to transfer value from one person to another without there being a third party necessarily to control it or to oversee it. In fact, it is a decentralized network that oversees that transaction. So there's not one person or one institution that has power, and takes a little bit to get your head around that, but it's a very important point about Bitcoin. So another really important feature of Bitcoin is it has a fixed supply, unlike traditional currencies, which governments can print, as much as they want. Obviously, Bitcoin's capped at 21 million coins ever, right? Not all of them have been created yet, and a lot of them are probably in landfill in some computer in New Jersey because somebody was out there mining a bunch of Bitcoin on their computer and never thought it was going to amount to anything, and just threw away their computer with several $100 million worth of Bitcoin because at the time it was probably worth nothing. Anyway, started in 2009. There's probably of places to mine garbage for computers with Bitcoin on them. Anyway, the interesting thing about that cap is it makes it even sort of more scarce than gold, right? Because we know we can continue to mine for gold, and we don't really know when the next gold mine is going to pop up and we get that gold too. But with Bitcoin, it's finite. 21 million, it's over, right? So right now, the total value of all the Bitcoin that's out there, that's already been mined, which is called, of course, its market cap, is about $2 trillion. And that might seem like a huge number. It is, but it's actually pretty small compared to other assets. For example, gold's total market value exceeds 12 trillion. It's 12 to 15 trillion, I believe, in the US stock market, about 50 trillion. So despite its rapid growth over the last decade, Bitcoin is still relatively small in the financial world. So why does this matter? Well, Bitcoin is still in the early stages of adoption. Large investors, corporations, even governments are, beginning to see its value. As more people and institutions buy into Bitcoin, its price is likely to rise, thanks to, of course, its fixed supply and growing demand. And therefore, it's not, in my opinion, unrealistic to imagine Bitcoin's market cap growing tenfold to, say, 20 trillion. And I would say over the next 5 to 7 years. Well, this, again, might sound ambitious. Think about it for a second. Wall Street has only started engaging with Bitcoin in the last year. Institutional exposure is almost certain to expand in the years ahead. We're talking about not only, the BlackRocks of the world, but you're also talking about, big institutions like endowments and stuff like that are going to start doing maybe 1 or 2% of Bitcoin as part of their endowment because they can't afford not to. Because if they don't, then they will they risk looking bad. Frankly, the endowment managers. I understand that Amazon has apparently in its reserves something like 5% of its reserves are in Bitcoin. I just read about that. I know Tika Tiwari was talking about it being a potential part of Microsoft's reserves, but they voted against it. Didn't make any difference anyway. I think Tika was making a big deal of it, but so that didn't happen. Anyway, the point is, though, that it's institutions, but, just think about every day. Surveys out there showing that younger investors are actually more comfortable putting money into Bitcoin than they are traditional markets. Think about the long-term implications of that, right? Bitcoin, ETFs and retirement accounts and all that. Meanwhile, again, fixed number of Bitcoin. So what happens? The value of Bitcoin just goes up. So why am I sharing this with you? Well, back in 2016, I encouraged listeners to take Bitcoin seriously. I was doing the same. Again, I wasn't all in. I wish I was. I wish I was like sitting in hundreds of millions of dollars of Bitcoin, but I'm not. A handful of you did go more in than I did and stuck to your guns and have gotten fairly rich from it. And I know that. So congratulations on that. If you had invested even 50 grand back when I started talking about it, it would have been over $1 million. So imagine some of you, some people went in all in, did 400 or 500 grand, are sitting on 10 million bucks right now. Do I think those kinds of returns are still possible? No, actually don't. I don't think so. I think it's one of those situations. If you think about what risk reward is all about, if you went all in early on, you took that risk when a lot of people were still saying that Bitcoin was going to die, right? I think Peter Schiff is still saying Bitcoin's going to die. And you risked a bunch of money and you reaped a huge reward. The thing is that the risk is not nearly as high right now, right? It's already been adopted. And once something becomes a BlackRock ETF, and again, the paradox is that this started as a rebellious type of anti-institution thing. Bitcoin did, these cyberpunks and stuff like that. But now it has become part of Wall Street, and that is what's going to make it continue grow. And it is also going to it's also creating a safety net for it. Do I think you can get that kind of 1000x growth in our lifetime? I don't think it's very likely, honestly. But I do see very realistically the potential for 10x growth again in not that long. I mean, maybe by the end of the decade, even, So if you're thinking about long-term investments, frankly, it might be worth grabbing some Bitcoin and simply holding on to it over the next 5 years. Or, you could wait until people say that the market is down again, but there's always a risk in that as well. It's unlikely, again, to make you as wealthy as early adopters at this point, but it could be a strong way to grow your wealth for at least a small portion of your portfolio. And again, I'm not giving you financial advice, but I am telling you that if I had to bet on one thing that is traded, right now in the markets, an equity, a commodity, even real estate or whatever, one thing that will 10x by the end of the decade, it would be Bitcoin. That's what I believe. So anyway, knowing that, that's what I believe. I'm going to continue to encourage you to spend some time learning about it. And this week's Wealth Formula podcast is a really good place to start. And we'll have that right after these messages. Wealth Formula Banking is an ingenious concept powered by whole life insurance. But instead of acting just as a safety net, the strategy supercharges your investments. First, you create a personal financial reservoir that grows at a compounding interest rate, much higher than any bank savings account. As your money accumulates, you borrow from your own bank to invest in other cash-flowing investments. Here's the key. Even though you've borrowed money at a simple interest rate, your insurance company keeps paying you compound interest on that money, even though you've borrowed it. Net result, you make money in two places at the same time. That's why your investments get supercharged. This isn't a new technique. It's a refined strategy used by some of the wealthiest families in history, and it uses century-old, rock-solid insurance companies as its backbone. Turbocharge your investments. Visit wealthformulabanking.com. Again, that's wealthformulabanking.com. Welcome back to the show, everyone. Today, my guest on Wealth Formula Podcast is Joe Kelly. He's the co-founder and CEO of Austin-based Unchained, which is a global leader in Bitcoin financial services that provides a suite of solutions designed to secure and maximize the value of Bitcoin holdings. He's got a passion for sound money and visionary approach to the future of finance and has been instrumental in pioneering innovative Bitcoin custody and lending solutions that empower both individuals and businesses to harness the full potential of their Bitcoin. Joe, welcome to the program.
Thanks, Buck.
So let's start with this. How and when did you get interested in Bitcoin?
Yeah, so my turning with Bitcoin started just a little before 2013. One of the co-founders of a startup. Thankfully, I had started a data analytics company in 2009 that ran for 4 years, and just before selling in 2013, my co-founder, one of the co-founders at the time, said, "Joe, we should buy some Bitcoin." And after the acquisition, for the first time in my life, I had some money I could afford to lose, and so I bought a little bit of Bitcoin. As many of us would say, never enough. Started the journey, and once you own a little bit of it, you're maybe incentivized to learn more. and I've always been curious about a lot of things like markets, technology, just like societal level things or topics, and Bitcoin really touches all those. So
yeah.
pulled me in the rabbit.
Bitcoin's such an interesting thing and how people get into it and their exposure, and so much of it is luck because, the reality is that I think I first started hearing about Bitcoin back in, I don't know, maybe it was like 2014, but I kept, I was listening to the wrong guy. I was listening to Peter Schiff talk about Bitcoin. I was listening to Peter Schiff's show. I don't know. Back in those days, for some reason, I believed in this sort of, the world is ending constantly, Peter Schiff perspective of the world. And so my first exposure to Bitcoin was Peter. And because of that, my perspective was so negative initially. And it wasn't until probably around 2016 where I was sitting in an entrepreneurs group called Genius Network that I was a part of. And one of the guys brought up Bitcoin and was starting to explain it and was saying how he thought Bitcoin was going to hit $10,000. And all of a sudden I had all these like guys that done really well in business talking about this very differently than Peter. And that was my exposure. Luckily, so in 2017, I got into cryptocurrency, which, was still relatively early, but
yeah,
but it's always interesting to hear people's Bitcoin stories. And I know that, and it's funny because if you turn this around, so I've been podcasting since 2014 or so. And when I started talking about Bitcoin, a lot of people never heard of Bitcoin, heard me talking about Bitcoin. And I know of multiple people in my group who then went on and bought a bunch of Bitcoin, who now made millions of dollars from that Bitcoin. And I'm not going to, I'll just say, hey, thank you, whatever. But on the other hand, it's just like, it's crazy how this all worked, right? It just nuts. If someone had knocked on my door in 14 and told me these great things about it from someone I respected, I'd been like, oh, I'm all in. So
yeah.
Anyway.
Yeah, several things there. I mean, between just having care when you're talking, when you're talking about things, that knowing that people will might take that as investment advice.
Yeah.
But also, and all that internal reactions. That was very much my own. Also, that like my earliest signs or things of thinking about Bitcoin. That's why my first allocation was so modest, so tiny, because it was like, yeah, surely this thing is just, it's a big risk. So, but I think there's, from an investor psychology perspective, it's interesting to pay attention to yourself in those moments, because that's also maybe a lesson that, maybe a lot of other people have that initial reaction to, that initial antibody spins up around it. And that's then that might be a contrarian idea. And often contrarian ideas are what open the door to like a much greater return or much bigger upside. Sometimes those people are right to call it a scam or to dismiss it. But sometimes that dismissal, that feeling early, is kind of a sign that maybe there's something more to it. If you also see
Bitcoin's been declared dead so many times. But and beyond that, I will say this is that it's still, the psychology of it in hindsight really is really fascinating to me. Even if I look into my own, so I really believed in Bitcoin even starting in 2017 and 18, and believed that it would hit 100,000. I still think it'll be 250 grand in the next few years, and it'll eventually be $1 million of Bitcoin. I believe that, and knowing that, you would think that I would dump every penny I had into Bitcoin, but I'm clearly not doing that. And in fact, Bitcoin winter hit in 2017. So I got in before the winter, right? So before the winter, I rode it. I rode the happy days for a bit. And
that first almost 20K moment there at the end of 17.
No, it was even, is that right? That was 20K, right? Almost 20. Yeah, something like that. And then, but I still believed in it. But then there was like a couple years where it did nothing. And so rather than just keep it there, I think I sold like, I don't know, 70, 80 Bitcoin for like 400 grand or something like that, and that would be worth quite a bit more right now. But it's, but it's not, I didn't sell it because I didn't believe in it. I felt like I could catch it before it took off again. And of course, by the time I got back in, it was too late. And there's you can learn so many lessons being in Bitcoin and investing
about market,
yeah,
about time preference, about and I mean, part of the beauty is, I mean, it's hard, we all can guilt ourselves a little bit for when we sold Bitcoin, but part of the beauty and why it has value is because it's very liquid, so you can sell in and out, anytime.
yeah,
And then watching, understanding how price discovery happens, how market works, what order books look like, and something that a lot of people are still mystified by when they're used to just prices meaning like what you pay at a grocery store versus like what sets the price of Bitcoin again,
yeah. How do you see Bitcoin? Like, what's your perspective? Like, I mean, for me, I see it ultimately as digital gold. I don't see it as digital gold yet because I think the market cap's not big enough. And because of that, you have too much volatility. And right now it's trading like a tech stock. But eventually I think it trades like gold. What do you think?
Yeah, I think that's very fair. I think gold, it's an analogy, right? And it's useful. It's useful for what gold was to humankind for so long, which was as a form of savings and investment mechanism that wasn't otherwise like a business or otherwise considered a productive asset or commodity like gold. I'm sorry, like oil. More in that kind of spectrum of industrial use cases there. So yeah, I think that's apt, but it's also new. Gold has limitations, and while Bitcoin has even some limitations of its own, it's at least something that's digitally native, and in society and a world now that is dominated by digital things and has like a growing digital market that's nonstop been growing for decades now. Bitcoin has a unique utility, and then it just has unique things to kind of reconcile against what we've seen at Unchained for so long. It's just now a financial system and a legal system that makes assumptions about property and assets that that are kind of broken when it comes to Bitcoin, or they have to rediscover. When they made some rule about a thing about how a title is transferred, or how about somebody owns a property, or a lender has a lien against that thing, like that system was kind of built out of fiat, and gold kind of has a small niche there, but mostly it's still this fiat dominated mindset. So there's this way that gold is, or Bitcoin is kind of carrying through in these new products and services that Unchained does. We have to kind of refigure out, reconstitute the tree almost a little bit of the family of financial services and all the things that come around investment assets.
And I think one of the things that's a little bit paradoxical about Bitcoin, in my view, is that I think the people who represented Satoshi Nakamoto, or whoever created Bitcoin and that community, I don't think that they envisioned it as becoming an instrument of Wall Street. And so the paradox is the very thing that I think they were trying to move away from, which is the dominance of Wall Street and institutional money versus
centralization. Yes.
Yeah. All of these things are actually happening to Bitcoin. And paradox to that paradox also is the fact that is what's ultimately going to drive this to $1 million. What are your comments on that?
It's a big yes. I mean, I think the Wall Streetification of Bitcoin, it was Ben Hunt, who writes on Epsilon Theory. He was I think very early to this, or like saw this really in the last cycle in 2020. Is we're kind of celebrating the MicroStrategy and the other kind of Wall Street firms that started to dip their toes in more. He saw what's going to become this institutionalized wrapper, this version of Bitcoin that isn't like really the real Bitcoin. I do think both things can kind of coexist. I do at least think some of the promise, perhaps for the new administration, we'll see how much of it comes through, but the promise is at least some preservation of the features of self-custody, which is one of the main things that keeps Bitcoin as Bitcoin, or in this kind of original flavor. But that, you've seen it with, this ETFs now holding, close to, well, not yet 2 million coin, but over 1 million coin, over 1.5, so over 5% of the supply now of current Bitcoin is held in ETF vehicles, and that's likely to only grow. That'll have to peter out or asymptote out somewhere, but that is something to the extreme kind of centralization risk that's there from the market pressures and the demand, and the way now we've seen that Wall Street and Bitcoin get synced up through that ETF vehicles.
Yeah, and also even the adoption of some governments, including potentially the U.S. government,
Yeah.
With the Trump administration, RFK Jr. talking about adding it to the Treasury, right? And so you're looking at even more of I guess, a centralization of this entire thing. But those types of potential variables also probably would drive up the price insanely.
Yep.
So let's talk about that, because that's kind of where your company comes in, right? I mean, what does Unchained do? Why don't you tell us a little bit about what Unchained does?
Our main focus is helping long-term Bitcoin holders secure and manage their wealth in Bitcoin. The security part comes to play because we help people secure their Bitcoin in multi-sig. So multi-sig is basically an address format, or you can think of it as a primitive smart contract for Bitcoin, where there's multiple keys that are associated with that address, and some subset of those keys are required to move it. Some subset have to sign. And so a common multi-sig setup is that we use is 2 of 3. So there's 3 keys, 2 are required to move the funds. And for most of the Bitcoin we help secure, we secure around 100,000 Bitcoin today. Most of that Bitcoin's held in this 2 of 3 format, where the client actually holds 2 of the 3 keys. So they are they're in that pole position, or that unilateral control position for their Bitcoin at all times. If they lose one of their 2 keys, they can turn to Unchained as a co-signer, somebody to also sign, so they can move their key back to an address that preserves their full control, and they have all the keys too. So it's really interesting, kind of model breaking too, form of financial services, where we're we're challenged in some ways to build and drive a business model that doesn't require sitting on the client's assets. And what you've seen in business models like these firms that have come and gone, like a BlockFi or Celsius, even FTX. So I don't think their business model depended on this. They just did it anyways. But with firms that take the client assets in and then do something with them, they lend them out, they promise maybe a return or a yield back to the party. And this was under that mindset of all these people kind of repeating the playbooks that were there. They saw that this is what banks do. Oh, so now crypto, Bitcoin's around, it's money. Now let's go build financial services business models on top of this that look like banks. But banks, to make money, banks have to lend, and there's not a good market to lend Bitcoin. If you lend Bitcoin to somebody, if I borrowed Bitcoin, it's a way I'm technically short Bitcoin. Like that's how usually shorting kind of works. So if I borrow 10 Bitcoin for $1, I owe $1 10 Bitcoin later, like that, now if Bitcoin careens upwards, like that's a way more expensive, short now. So like the borrow market for Bitcoin is very, very limited, very small. So and because also Bitcoin itself is limited, there's not like an inflationary means by which new Bitcoin is being created at all times, and outside the block reward, which is just limited and known. So yeah, you kind of have for us, trying to build value for our clients in a way that isn't just purely kind of a capture and fee on their assets.
Yeah. So you hit a lot of points there, and I think just in terms of people's understanding, so Bitcoin is Bitcoin basically is code, right? I mean, it's I don't know if
Software.
that's software, and the problem with keeping it on, say, a centralized platform like Coinbase or Gemini or one of these places where you buy it, is that it's part of it. It's hackable. You can get into a Coinbase. You can get into these kinds of internet sites, and you could potentially lose your assets. I spoke to actually an investor of mine just last week who experienced somehow somebody hacked into her Coinbase account and sold off her Bitcoin, sold it off, transferred it to someone. And
that's what frequently happens is people's own accounts get hacked. Either like they reused a password, or somebody brute forced their passwords, or they got into that individual's Coinbase or other centralized exchange account. And then once they author a transaction to send the Bitcoin out, it's gone.
Right. And so that's, and she said that the first time she heard about it was basically an email from Coinbase saying that her transaction was successful, which is unfortunate. That sounds crazy. But obviously it happens. And so one of the things that people do, including, me is we use hardware wallets. In other words, what we do is we transfer these Bitcoin into essentially into places where they are no longer online, and that's called a cold
Yes.
wallet, right? And so that enough sometimes is enough. Probably if if you're not holding hundreds of millions of dollars of Bitcoin, but yours creates one more layer. And I guess, why don't you describe a little bit more granularly what that is when you talk about the multi, sig wallets, just so people understanding that a lot of people don't have exposure to
Yeah.
Bitcoin right now or might be thinking about it.
Well, I love to have this conversation. Even it echoes from where we started in terms of what it's like to kind of first year of Bitcoin in some ways, and then first year of the all that kind of goes into it. Because most of us, we don't have exposure to these things like keys, cryptography, even software. Is kind of new, or like has over the last couple of decades has grown in its technological importance. But it is, and that's why even owning Bitcoin, when it starts to be more valuable, it kind of pulls you down here. But what is nice about Bitcoin, right? I've enjoyed as someone, I'm an engineering bent, even though I'm not that professionally, is there's hard answers. There is like good hard answers to these technologies, or like good tangibility to it. It's not vaporware by any means, but Bitcoin is a $2 trillion plus asset now. It's like very, very much kind of proven itself in the market as something very real. But back to your question, so you're absolutely right that like many people, you buy some Bitcoin on Coinbase, or when River's another great entry point. There's other good places now you can buy some of your first Bitcoin, and usually you're keeping the Bitcoin at that place to start, and then as you learn more about it, you want to get more hands on with the technology. And the main ways you can do that is through a hardware wallet. As you mentioned, the hardware wallet is what stores your key. Bitcoin is only ever actually stored on the Bitcoin network. Bitcoin network, it's just a ledger that's upkept by all the miners and nodes that operate it. And so when you're using a key, what your key is doing is it's signing a transaction that the network recognizes, that then moves the Bitcoin from one account to the other. So it's a signature that's essential. That's what Coinbase or any of these other firms are doing when you are asking them to move Bitcoin, is they sign and they submit the transaction to the network that moves the Bitcoin. And it's this interplay between these forces of like what are centralized exchanges doing when they intermediate you between, quote unquote, your Bitcoin and the Bitcoin network, versus when you now hold your own keys, you hold the Bitcoin and the key to it on your hardware wallet, you now get to participate directly in the authoring and the creation of your transaction and the submitting it to the network. So now, if I'm wanting to send one Bitcoin to Buck and I'm doing it with Bitcoin on my hardware wallet, it's an amazing experience, an amazing aha moment to go through, is when you do that all on your own, and you saw that nobody intermediated that. There was nobody that you had asked for permission. Nobody, the only permission you gave was like the actual signing of with the device, and then broadcasting it to the network, and it happened. And Buck receives it wherever he is in the world, and on whatever means you decided to take it. So those keys that I mentioned, and the multi-sig construct that I mentioned, the 2 of 3, that's just basically where, when our clients are working with us, they have 2 hardware wallets. Usually one is kept maybe in their home, but the other one's kept like at an office or a vacation home or some other location. So you don't want to co-locate both of those keys. And so when Bitcoin, when the address is set up, you set up the 2 keys, you can add them to your multi-sig wallet with Unchained or other open source softwares you can create wallets with. You add those keys in. You can do those separately, so you don't have to do them at the same time. And then when you receive Bitcoin to that address and want to spend it later, you just have to go get each of those keys and have each of them sign a transaction. Just 2 of them. Again, it could be one of your keys and one from Unchained. So multi-sig is a part of the protocol in Bitcoin. It's one of the nice things they kind of built in years back. So it's very robust software, very robust like cryptography that builds those addresses. Other blockchains or things like that, it's sort of was a later add, or things done in these smart contracts that actually had leaks and hacks and things that people lost funds in different multi-sigs. Bitcoin's multi-sig is a very robust way to store Bitcoin, and it's the best way to get the right trade-offs of security, redundancy, and reliable access to your Bitcoin when you need it.
How much does it cost I mean, I guess some people probably might be thinking, well, I've got some Bitcoin, but maybe I don't have enough to really justify, using a service like this. What does it cost to, use a service like yours? I guess the question
Yeah.
ultimately comes down to like, when is it justified?
I think it's I think if anyone's on a learning journey with Bitcoin, I think it's worth buying a hardware wallet regardless. They're $100.
Yeah.
You can kind of mimic the experience with an app on your phone, but there's something about the hardware wallet experience that even, really reifies it. So even if you're just looking at couple $100 in Bitcoin and, you can afford $100 hardware wallet from Ledger, Trezor, Cold Card, make some great devices. It's a worthy way to kind of learn about the technology and get a feel for that aha experience that comes when like, oh, nobody was in the way of this. This wasn't like
Yeah.
it wasn't a wire, desk I had to talk to at my bank to move this funds. It was just on the network. And then Unchained service, we cost $250 per year for our basic personal account type, and we have other options and things like that about that. But people that can do self service or have used these wallets before can just get set up with Unchained. And we don't, again, not unlike a lot of traditional financial services models, we don't charge basis points on the assets. We don't charge like a percent on their value. So value can fluctuate every year, but our subscription cost is just the $250 per year. Multi-sig, importantly too, it's also because it's baked into Bitcoin software and Bitcoin software is open source. There are a lot of open source wallets. You can kind of do this yourself if you want. You can set up your own 203 multi-sig where you have all three of the keys. It's just now you come up against problems of like inheritance or estate planning matters, like what happens if you die. Well, if you've maybe you've already read your significant other into like where all the keys are and it just doesn't matter, then I think that's okay. But that process still might limit out somewhere of like, well, what happened to both of you? Both of you were in the plane crash or things like that. So a service like Unchained, again, because we only hold one of the three keys, we can't provide any service to anyone's estate unless there's still one of the other keys that's recoverable. But that's at least one way you can manage the trade-offs of having that one key, at an attorney or in some place that's still discoverable in the event you're gone or any direct next of kin is gone. And Unchained can be there to kind of handhold or work with any survivors or at least the estate in the movement of the Bitcoin.
So do you only work with just Bitcoin, or because obviously there's significant, there are people who have a lot of Ethereum, for example, and I anticipate there's going to be a lot of Solana multimillionaires if there's not already.
No, correct. I mean, I think there certainly are other people out there and more and a lot, well, Bitcoin itself is $2 trillion. There's a further, maybe another whole trillion or something like that of other cryptocurrencies. We found Bitcoin, it's just, I think the best place to build a long-term business. At least today, it's the most sort of durable, robust technology you can look for. It's also, as just a use case and investment case, the closest to a real money and the closest things understood by most people as money. And so, given we're a financial service, then that's the sort of the business model for money, more or less. While other things, they kind of look like just more like technology, like speculative tech investments or tech things which you can own fractions of through their coins. So I don't. Thankfully, I don't have to spend a lot of time like researching or understanding. I'm definitely not an expert in other non-Bitcoin cryptocurrencies. And if we can't make this business work on just Bitcoin alone, then there's no hope of trying to do it for everything else. Anyways, and we find that just the focus on Bitcoin suits us. It suits us here out, at least where our hearts are, and we're
of course, that makes sense. Okay, so let's talk a little bit about so from that perspective. By the way, anybody with right now, there's probably a lot of people listening who have a meaningful amount of money. And so, it's certainly an option to think about $250 as prevent. But what, and before I leave this topic, are you insured or obviously this gives you a lot more security, but on top of that, what if you are hacked? Are you insured, or how does that work?
So Unchained has the typical menu of business insurance that you'd have at like a company our stage and size. We don't have, I would say, like what are the kinds of insurance policies that Coinbase and others will tout, that if you're an institutional client and some Bitcoin is lost through Coinbase's fault or some other fault of one of those types of firms, that then that policy would pay out. Importantly, though, like the friend or the investor you mentioned earlier, where their coin left their Coinbase account, and that's not really an insured thing, even though Coinbase doesn't enforce policy. It's for, the kind of instance where Coinbase itself is hacked and some insider threat causes loss. But there's no way to really Coinbase is too big for it to have an insurance policy on all, million plus Bitcoin that Coinbase itself secures. So insurance is a challenge. I'd say we don't offer insurance right now through like a prepackaged form or a productized form. We have partners or ways we can offer insurance to clients that look more like kind of like a jewelry insurance policy, because the clients are holding 2 of the 3 keys themselves. It's kind of like if you have jewelry in a box at home. There's ways you can get insurance policies against theft or loss of that jewelry. And so that's kind of the form or the type of policy that we can, acquire for our clients, but on an individual account basis. We don't have it in a scalable form. It's not really a thing a lot of people tend to ask for in our client base, but we're mindful, we watch for when it becomes more of a.
No, I get it. I mean, it essentially, from my perspective, what you're really looking at is, with these multi-signature wallets, you're just trying to find someone who's a third party that, that you can rely on, just say for estate purposes, state purposes or whatever, the same way you would for any other estate purposes for other assets, right? So helping people kind of figure out where things are and keep it clean or whatever. There are other services, though, I understand that you are involved with. Can you talk a little bit about Bitcoin IRAs?
Sure. Yeah. I think Bridget, really from your talk, I know you said estate, but there's also almost an idea that like we're an important third party for you for help with the state or like, state government kinds of things that require, attestations. One of the more valuable things you provide for people is just PDF vault statements for, if you have a vault with us, that's one of these 2 and 3 multi-sig accounts. Again, if you're holding Bitcoin on your own and just a hardware wallet, sometimes in the financial services realm or in other purposes, you might need to prove assets. You might need to prove that you have the $2 million of Bitcoin you say you do. And while it's great that the technology allows you to do it very, cryptographically, it's on the blockchain. It doesn't. If you point to an address, there's nothing you're saying that proves that you own it. But if at least, through your Unchained account, you can get a PDF that has our letterhead on it and shows your account statement with a date and shows, Buck has 10 Bitcoin here, and there's, that's the $1 million of Bitcoin he claims he has. Like that. That's kind of just one purpose or one way we add.
Have you been able to use that for, because one of the things that, for example, if you're trying to get a loan and you're trying to show liquidity, things like that, no, I have not ever really seen anybody accept that Bitcoin as a liquid asset when you're trying to say you're trying to buy real estate and you're saying, well, I've got this money, and they want you to have some percentage of it. They usually don't accept Bitcoin as that kind of asset.
It depends. So, when the lender is a bank or a regulated financial institution, at least from the last few years, we've seen that that any Bitcoin you claim is like treated as zero, or it's you might as well be worth zero. But there's other like private party transactions or other instances where maybe some underwriters or for some reasons you can prove you own the Bitcoin that you say you do, then maybe that lubricates that transaction or as part of that transaction getting done. So because we do have instances of that, I definitely have instances of clients that have gotten value out of the statements they can get from us and the PDF statements that help with their ownership.
Sure.
And we offer one of the other products. It is a Bitcoin secured loan. You can use your Bitcoin as collateral through us for a loan, or commercial loans only, or to commercial entities only. But we've been doing that as for our longest running business line.
So you provide loans?
Yes. Yeah. We'll lend against Bitcoin as collateral.
Really? What kind of terms are those typically?
We do 40% LTV. It'll be soon 50% again. And then we'll, right now our rates are around 16% APR. So it's like a 14% interest rate and a 2% origination fee. And, and there's margin calls throughout the period. It's meant to, as much as possible, work like kind of a margin loan against a securities portfolio, like a brokerage account.
Yeah.
And the cost of capital are where they are. We do the best we can for our clients, but our sources of capital for these kinds of loans are already pretty high. Or like we talked about, like banks and a lot of traditional lenders don't value this asset, so it's hard to get good competitive cost of capital.
So one of the things I've been curious about is sort of debt when it comes to collateralization of Bitcoin, and it sure seems like it's not just you guys, that's market rate. Sure seems high, I mean, if you are able to, if you're able to do a margin call and you already have the asset, it's like, and is that just because there really isn't, just because there is this sense of, that it's not a real asset from banks? Is that really the reason for that? Or
I mean, it's a really, I can almost write a thesis at this point about it. I mean, when we started in 2017 with our Bitcoin backed loans, I felt sure that even as we were lending then at like 10, 11, 12% in that rate environment, I felt for sure this will be a 3% loan within like a matter of years. Like it's so
yeah,
of the collateral, but that's, that's just how capital markets work.
yeah,
And one of the major players to in liquidity and credit markets are banks, regulated banks, and they were all warned off, either explicitly or implicitly, and scared out of lending against Bitcoin in the last 2 years.
yeah,
And so that's like one big major player that's there, and that's really, frankly, not there. And then, just the way on the margin where capital allocators or people who sit at these private credit funds or people that allocate capital into credit strategies, credit's still very conservative. There's a game that tends to kind of reward the more conservative types, and Bitcoin just has sounded anything but conservative to a lot of investors over the years.
yeah,
So just on the margin, if they're thinking they can invest, I don't know, 13% in get a Bitcoin secured loan at 13% return versus a return on, I don't know, invest like lending to a late stage tech startup for 13 or 14%, that's got cash flows or these things. Like there's just the lending, alternative lending market. It's where you'd say a lot of that capital sits. Bitcoin has just not been in their first, like the top 3 to 5 dishes on the menu for them. They're
yeah,
really focused.
yeah. Well, I think we haven't got addressed the IRA part. How do you do that?
Yeah, circling back to that, it's really the idea that an IRA account. So we work with a custodian bank that's where the account lives. So a client signs up for an IRA through us. They actually get an account at Fortis Bank out of Colorado, and then with that account at Fortis, though, they have set up through us the same 2 of 3 multi-sig vault. So it's really the rare IRA. There's been kind of one other firm that has had this, but I mean Unchained, we're the leader, you could say, but where you get to hold your own keys to Bitcoin in your IRA at all times. And so we now have thousands of clients, hundreds of millions of dollars, if not, I think over $1 billion now of Bitcoin that's secured in this form of IRA, where the client gets to hold their own keys. And so you can roll your traditional IRA, traditional assets into this product.
So mechanically, do you
Yeah.
roll in cash or do you roll in Bitcoin? Like, how does that work?
You can do either. That latter we call in kind, of like maybe you have Bitcoin, you have a Bitcoin IRA already at a firm that lets you do that. You can transfer that Bitcoin to us, and then that will end up in your IRA with us as Bitcoin as well. But it's essentially works just like an IRA account you might open at a Schwab or any other brokerage. You just open it up through us, and then uniquely you get to hold your own keys, which is great. You have seen instances at some IRA providers where their custodian gets hacked or there's some issue with the assets that were supposed to be there for those IRA accounts. So at least in this way, it's it's isolated. You get to hold your own keys at all time, and what we provide as a service, as that back to you in your state point, is that because we hold one of the keys and the whole vault and setup is administered through us, we monitor for inbound contributions and any distribution, and then we can flag if that was outside of the IRS guidelines for that account. And so it's just able to maintain compliance with IRA regulations and what's required to keep that in good standing for the
Got it. So normally, just to be clear, you can't just buy Bitcoin for an IRA and have one wallet connected with it that you hold the keys. You have to have you have to have one of these multi-sig things, right?
Yeah, I think that's kind of what creates. I think it would be hard to do it like without that.
Yeah.
Just it's like a maybe, but at the very minimum, you do still need something like an institution, either trust company or a bank, to provide the sort of top level account holding idea. And then where the custody is, it's kind of like they have a sub custodian relationship with you as the actual and account holder, but they're saying, oh, for Buck's IRA, it has this Bitcoin in it, but we delegate the custody of that Bitcoin to Buck.
And what's the cost on those? Is it similar?
Yeah, also $250 a year. We waive those fees for the first year though. And clients, it's $250 a year per IRA account.
Yeah. Fascinating. Cool. Is there any other products that you think are interesting that we should talk about that I haven't mentioned?
And that's the big one we talked about, the standalone custody IRA. Appreciate you bringing that up. Our loans are always an interesting subject. We did launch a registered investment advisor. We found that a lot of our clients would get either bad or no advice from their existing wealth advisors, people who couldn't talk about Bitcoin either from just personal and ideological reasons or even compliance reasons. They weren't allowed. And so people have kind of watched their portfolios grow in Bitcoin. Our registered investment advisor service called Sound Advisory. They can kind of provide advice and work with them on their traditional portfolio, as well as like how they administer their Bitcoin, perhaps through Unchained.
Sure.
It's just a good journey for us. We launched that last year and it's been off to a great start.
Well, fascinating stuff. How do people get a hold of you?
Sure. Well, I'm easily findable, emailable. I'm joe@unchained.com. Unchained.com is our URL, and also our Twitter handle, UnchainedCom. You can find us there anytime. X, I should say, our X handle, UnchainedCom.
Fantastic. Joe, thanks so much for being on Wealth Formula Podcast.
Yeah, thanks for having me.
We'll be right back. You make a lot of money, but are still worried about retirement. Maybe you didn't start earning until your 30s, and now you're trying to catch up. And meanwhile, you've got a mortgage and private school to pay for, and you feel like you're getting farther and farther behind. Good news. If you need to catch up on retirement, check out a program put out by some of the oldest and most prestigious life insurance companies in the world. It's called Wealth Accelerator. It can help you amplify your returns quickly, protect your money from creditors, and provide financial protection to your family if something happens to you. The concepts here are used by some of the wealthiest families in the world, and there's no reason why they can't be used by you. Check it out for yourself by going to wealthformulabanking.com. Again, that's wealthformulabanking.com. Welcome back to the show, everyone. Hope you enjoyed it. Well, again, I think it's something that everybody really who's listening to this, if you have not spent any time trying to learn about Bitcoin, I really encourage you to do so. I'm not even saying that you need to buy some, but at least learn about it. Learn why it's not this joke that Peter, Schiff likes to pretend it is. It's not. It's real. And it's likely here to stay. So, one of the books that a lot of people read is this Bitcoin Standard by Saifedean Amos. And it's a pretty well-regarded book. That might be a good one for people to consider. Or, you know what? You can even just go and watch a bunch of YouTube videos about it and try to understand what the big deal is. Michael Saylor from MicroStrategy speaks very eloquently to this as well. So look at maybe some of what he's talked about as well. Anyway, that's it for me this week on Wealth Formula Podcast. This is Buck Joffrey signing off.
Thank you for listening to the Wealth Formula Podcast. Visit us on the web at wealthformula.com. The information contained in this podcast are opinions, not fact. As always, consult your own financial team before making any investment. See you next time.